Hi everyone. Good morning, good afternoon, or good evening, depending upon where at whenever what time you are looking for the video. Welcome to Naukri Learning. Hope you had remember me and watched my first video on career opportunities in accounting and finance. So here I come with the next video on options in corporate treasury. I am, being recruited as a finance mentor, where I'll be covering various sections or various topic in different videos. To walk you through about the career opportunity so that you can explore yourself, see where you can be fitted depending upon the areas of interest or the knowledge or experience you have in different domains. So moving forward, so this is very short description about myself. I think you must have seen in the last video itself only, so I've just included this for the person who is looking for this video for the first time. So again, I am Piyush Bansal. I am a chartered accountant, having a good amount of experience into finance domain, and currently I am being associated with EY GDS into liquidity services and transaction domain. So moving on. Uh, so the content which we will be covering today is about corporate treasury, regulatory objectives, liquidity risk management, and hierarchy of roles and responsibilities. So sorry, my bad. So what do you mean by corporate treasury? So the name itself represents corporate mean a company or an organization. Treasury is something which relates to finance. So any roles and responsibilities which are being undertaken by the organization relates to company finance or how you manage your funding, liquidity needs, or capital needs. So this is all about a treasury, and which is very guys, which is very important or very the role which is coming across in from the past couple of years, and it is very popular, and you can make your career in this. And there are multiple roles and responsibilities and areas are available where you can make your career into. For example, I have highlighted a very brief on the right side about cash and liquidity, financial risk, operations, technology. Even somebody who is from IT background can also be a part of technology. For example, you can build a software called where your data analytics knowledge is covered, and risk valuation, accounting and control, operations, commodity risk. So multiple roles and responsibilities are available, or various roles are available where you can start your career into. And I believe various majorly all the banks have these roles. Talking about Goldman Sachs, JP Morgan, Macquarie, Barclays, every organizations have a corporate treasury, which I believe so. So common task, which is obviously is not an exclusive one, because we have multiple roles, multiple responsibilities and descriptions are available depending upon the banks. And so I cannot input all the information in one go. So meeting financial resources in order to meet company objectives. So financial resources can be any, how you meet your funding needs, from where, which subsidiary, or where, which organization actually you are getting money whenever it is required. Meeting regulatory objectives. So it is very important to understand that what is regulatory objective. I think I've mentioned this in the next slide also. So regulatory is something, for example, in India we have RBI. So similar to that, different organizations have different regulatory reportings depending upon the area of establishment. For example, if we talk about Australia, APRA is there. Okay, England, PR is there. So different organizations have different reporting institutes depending upon the establishment. So accordingly, we have different returns are available, different guidance are available, and you have to follow those guidance, understand those guidance, and apply those guidance in your not in your practical working areas. Okay, managing type of risk. So risk is, again, is not something a small area. It has various type of risk available. It can be credit risk, market risk, interest rate risk, or your reputational risk, you know your liquidity risk. So different risks are available. So we are not here to discuss each and every risk. I am more concerned about a risk which is related to treasury. This is what is there in corporate treasury. And finally, liquidity risk management. Again, covering one section of risk is there, which is called liquidity risk management in this section. So So moving on, regulatory objectives. Okay, so what do you mean by regulatory objectives? So regulatory objectives are something, where you need to file your regulatory reports or standards on the basis of the requirements of the establishment. For example, in India, you must be aware of registrar of companies. Okay, so we file our reports to our MCA, and the company who is listed need to file the report various returns to SEBI or reports to SEBI to adhere to regulatory guidance. So similar to that, we have various reports, to different reporting institution for the treasury part also. So banks these days are required to certain regulatory requirement adhere to certain regulatory requirement, ensure integrity in the financial system, where financial institutions are covered by regulatory authority. So that's what I mentioned, that they are governed by regulatory authority. Different institutions are governed by regulatory authority. An individual who is somebody who is expertise in finance domain, for example, you're obviously CA or MBA in finance, play a critical role in maintaining the integrity of the financial system into various areas. So these are the areas where you can make your career into: capital adequacy, liquidity reporting, central bank reporting, large and country exposure risk reporting. So it is again not an exclusive list. It is just in a brief or extract I've taken based on my understanding, where you can make your career into. So capital is again a capital returns are there. For example, you must have somebody who's into this domain must have written CET returns, liquidity returns, for example, your LCR, NSFR, CMM. So there are many various multiple returns are available, where reporting requirements are there. For example, if I've been into Macquarie, I give an example. I've been into Macquarie, so I was on the reporting front where I was filing reporting to APRA, who is just Australian regulators, and where I was majorly handling LCR and NSFR reporting. So what do you mean by LCR? LCR is liquidity coverage ratio, where you which measure basically your obligation for the next 30 days. NSFR is net stable funding ratio, so where we measure stability factor about the balance sheet items. So again, central bank reporting, we have country exposure reporting, we are Bank of England reporting, Bank of Japan reporting. So different countries have different reporting depending upon the risk matrices or the size of the company. you know the role provide excellent exposure to all the areas of the bank, including product control, finance control, and treasury. I think I've mentioned about what is product control and finance control in my last video. You can, obviously reach out to that video and see what do you mean by product control and finance control, and obviously reach out to me separately also by commenting on this channel. I'll be very happy to answer the questions. This role provide excellent opportunities in product control, finance control, treasury, operation, IT, front end office, legal and credit risk. So there's various domains which are where it is linked actually. So as such, it is a very good entry route into financial services. You can also gain promotion within the area, become senior level expertise, or move up in the hierarchy. So depending upon the roles and responsibility, depending upon the uh, hierarchy where you have joined, and you can obviously become an expert or subject matter expert within the areas of within the span of certain time period. So moving on to liquidity risk management. So what do you mean by liquidity risk management actually? So as the name suggests, liquidity risk is something, a risk which is available, which is related to liquidity, liquid fund, liquid money. So for example, you being working in an MNC, and you have 80,000 rupees your per month salary, and you know that you have to pay your rent on first of every month. So what if the salary isn't credited till 31st or first? So that means your liabilities are still arising, but you don't have money to pay to your landlord. So that is called obligations which are due, and we are enable or unable to pay that money. So that is called liquidity risk. So liquidity risk management is obviously a management of liquidity risk. So it talks about development of strategy, action plans, your mitigating factors, risk areas, assessing the risk to minimize such risk. For example, maybe you can keep a buffer money available with you always, at least a rent amount, or seeing what are the forecasting payables which are available to you and keeping the buffer amount according to it. So that's all about the plannings and plotting about liquidity risk management. So global framework and has been enhanced. For example, if you have heard about 2008 global crisis where various banks, who got bankrupt. So on the basis of that, this liquidity risk management has been enabled, and it come into picture, which is very much into focused area, and the norms are getting stringent for these liquidity risk management. You must have heard about Basel 1, Basel 2, Basel 3 and 4. You anybody who wants to understand more about the Basel, just let me know. Do let me know about the any any finance area which you are more keen to interested to. I'll be very happy to make the video on that also. So we can be part of providing various short-term and long-term solutions to identify, govern, and measure liquidity risk by providing consultancy services by joining consultancy firm. So this last paragraph actually talks about how you can be part of this liquidity risk management. So I've been into, for example, I've been into EY. So I have joined the consultancy firm where where we provide liquidity risk services. So similar to that, you can also be part of liquidity risk management services where you can provide consultancy in various domains. Actually, yeah, it can be fund transfer fundings, yeah, interest rate risk, LCR, NSFR, balance sheet management, 2052A reporting. So there are multiple reporting where you can apply your standard knowledge and depending upon the areas you're into, and assess the risk which is available to that MNC or an organization, and try mitigating those risks by applying peer bank knowledge or regulatory standard, and consult that what actually is the area where risk can be mitigated, and how actually risk can be mitigated. So we, I think every organization or every MNC do have their policies and procedure available where where they see that how that risk can be managed actually, by setting limits, what policy and procedures are available for in case of introduction of new services, in case of you must have heard about contingent funding plan. So how we are managing situation in case of crisis needs. So different factors or different services are available actually where you can make your career into and get an expertise knowledge actually. It is not just a one leg or one broader small team. It have various actually you say various sub areas available where you can be part of it and get your expertise knowledge. For example, balance sheet management, cash flow forecasting, stress testing, LCR reporting, NSFR reporting, CMM reporting, fund transfer pricing reporting. It is not just one leg of team. It is multiple roles and responsibilities which are available to liquidity risk management actually. So that's a very broad view about liquidity risk management. So moving on to a hierarchy actually. So Treasury Department plays very important role in keeping financial health of the company. That I think we have heard about it, we will understand about it, to intact and run the organization successfully. So they are responsible for projections and forecasting, cash flow projection, cash flow forecastings. Today, due to stringent norms, Basel 1, Basel 2, Basel 3, Basel 4, they are highly paid jobs in MNC banks, offering diverse jobs and opportunities in across the globe. So I think I quite agree with this you know line where, for example, if you are a chartered accountant and you must explore a Naukri portal, which is very good portal which we have or application we have, and you can always reach out to our experts of providing you job opportunities. So you just search it out, liquidity risk. You will find n number of opportunities and upcoming rules which are available for every bank or every organization to provide into. So, condition that you have an expertise knowledge or a basic knowledge about liquidity risk. So it is not that it gonna wash away in the few years. So if till the time banks are available in the world, I think liquidity risk will be there in to playing an important role, and the norms are keep on getting stringent for each and every areas and every section. It never gonna fade away. Okay, so you can join here as a trainee, entry level person, middle level person, head of, and then become a head of treasury, and you can always join as a research analyst also. Okay, so an entry level person, you just need a finance level knowledge. For example, you being a chartered accountant or a MBA finance, you started your journey after getting a theoretical knowledge and wanted to start fresh in the career, and then you can join into any of the treasury roles, a reporting role, stress testing role, cash forecasting roles, or waste department, and gain the knowledge expertise into different areas, specific areas, and be part of it and understand the regulatory guidance and assist the senior team, senior leaders accordingly. So where is possible MNC, I have just highlighted a basic thing. BCG, Cisco, JP Morgan, Goldman Sachs, Macquarie, Barclays, they could be the possible MNC where you can make your career into, actually into. Okay. And the middle level person are, it is just a hierarchy, it is not a detailed one. I've just uh, told you on the basis of my understanding. It is not like it is a stringent, or it is actually a rule. This is just based on my understanding and observation. So middle level person are actually individual who comes from a finance background with more than 5 years of experience into regulatory reporting requirements, stress testing, policy management, okay, risk assessment, and act as a chain of command between analyst and manager. Then sure, they are thorough with the concept. For example, in Australia we have APRA. APRA have a standard called APS 210, which is based on liquidity risk. Okay, so it talks about how which returns you need to file it out to quarterly basis, on a monthly basis, and so you can thorough with your concepts. Okay, so they're the one who assists the senior manager. Similar to that, we have a senior manager, head of treasury, who performing their duties and responsibilities accordingly. So that's, I think that's pretty much about corporate treasury. It is not I have already mentioned that this is not just a exhaustive, this is a very basic background about or a overview about corporate treasury, where you can land into. And I would always say that make your current to corporate treasury. You will get a lot of things to learn about, and a lot of things which actually available, and we are not aware of these things. And you will understand how does the capital, how does the funding works within the banks, and what is the transfer pricing within the capital itself only. And yeah, that's pretty much about corporate treasury. In case you like the video, please do like, share, or subscribe our channel, and please reach out to me separately over the comments in case of any questions or queries you have regarding this, or any generic, any problems related to job, any career opportunities. I will be very happy to answer your questions, and I'll be very happy if somebody that really is looking forward to understand the detailed concepts about treasury. Thank you so much.